Hello, everyone. Welcome to the Safe House, brought to you by the Safe House Initiative. I'm Jeff Edwards, co-chair of the Safe House Initiative, and your host for today's podcast. Last week, Tawana's guest, Chris Wood, took us through the complex world of class action suits and kind of the scary bits and pieces. Tawana, did I remember that correctly?
You did. Chris talked to us about data breach litigation last week.
Yes, it was quite interesting. It explains a lot more about those letters that you write and send to me all the time, so I can settle in the $7.94.
Yes, exactly right.
That's right. So what are we doing today? Hopefully it's is not as scary.
Well, Jeff, today we have Jane Waring, a partner at Zel Law, who is going to chat with us about business interruption claims and litigation following a cyber incident. Hi, Jane. Thanks for joining us.
Hi, guys. Thanks for having me.
Jane, why don't we start by introducing yourself to our audience and tell us what you do and how you started working in these business interruption claims for cyber incidents?
Absolutely. I have been an insurance coverage litigator for almost 20 years now. Like you said, I'm a partner at the Zel Law firm, no affiliation with the Money app. Larry Zell came first. I joined Zel in 2021, and it was a perfect fit because Zel specializes in all things insurance, all different kinds of insurance litigation and coverage work. I represent insurance companies, and I specialize in business interruption losses under a variety of different types of policies, property, builder's risk, but cyber is one of them. I got my first cyber claim arising out of a malware attack on a large casino in Las Vegas in 2014. It had a large BI component. And because of my experience doing business interruption, BI claims in the property world and helping insurance companies navigate those and measure those, I was pulled into this cyber claim. And from there on, I just loved doing cyber as well as my other lines of insurance work. And I really find cyber BI claims interesting, a little different, which we can get into how they're different. And there's just a lot there. There's unfortunately a lot of disputes too, which keeps me as the attorney busy.
I can imagine. Um, so Jane, can you just kind of start out by explaining, what the issues are in terms of interruption claims and litigation for small to mid-sized business owners?
Sure. Yeah, absolutely. Well, business, starting kind of from a high level perspective, business interruption coverage under a cyber insurance policy is designed to provide coverage for the risk of losing profit as a result of the cyber incident. So the business gets hit with, ransomware attack or some sort of, impact to their computer systems, and they have to go down for a period of time, or maybe it's a manufacturer and their production is impacted for a period of time. This coverage is intended to come in and reimburse them for their business losses, their loss of profit as a result of that. And the reason that there are disputes that arise out of that it's not just, okay, here's your number, is it's really kind of an art, not a science, to measure that loss. What you're really doing is you're saying, if this cyber incident had not occurred, what would this company have made during this period of time, which we call the period of restoration? What would they have made during that period of restoration? And what did they actually make during that period of restoration? And the difference between those two numbers is their loss. But as you can imagine, estimating what a company would have made during a period of time is a bit of a an art, not a science. You have to look at a variety of things. You have to look at a lot of financial records. You have to look at budgets. What did the company think they were going to make? How were they trending? Were they trending up or down? Are they a seasonal business? Did the loss occur during a period of time when that was their hot season? Bathing suits in the summer, for example, where their profits would have gone up. Were they able to recover? Did they mitigate their losses by selling more bathing suits the next month than they would have? So there's a variety of different things that the forensic accountants who are hired to measure these losses will consider in coming up with that number. And that's one of the reasons. That's a dispute over methodology, accounting methodology. There's also disputes over coverage that we can talk about that tend to lead to disagreements between the policyholder and the insurance company after a cyber event.
Jane, you brought up an interesting point when you're talking about forensic accountants. Is there any specific documentation that a business owner needs to have in order to support their business interruption claim?
Absolutely, there is. So there's common documents that a forensic accountant is going to want to see from every different type of business. And then depending on the business line, there will be other more specific documents that the accountant might ask for. So in general terms, the accountant is going to want to see your financial documentation and your operational documentation. So financial, by that I mean your income and loss statements, your profit and loss statements. They might need to see monthly, they might need to see annual. If you're a seasonal business, they're going to want to compare the last few seasons. So it's not enough to just take the 3 months before the loss. They're going to probably want to look at how did you do last June? Maybe how did you do the June before that? It kind of depends on what type of business in your business model as to what financial documents they're going to want to see. And then they're also going to want to confirm the causation piece, right? Because just because there's ups and downs in your profit during a period of time does not mean that every down was the result of the loss. So in order to confirm that, they need to confirm the causation piece. They're going to want to say, okay, what applications are important to your business? If you're a manufacturer, which applications are critical to your production lines? In my casino loss, for example, we had slot machines, right? Those were still operating, but there was a claim that their profit on those slot machines was lower during the cyber incident, which didn't make sense to us because slot machines are a game of chance and there shouldn't be any application running in the background. This is probably prohibited, right? That makes the house win more often when your computer systems are up. We got to test. The insurance company has got to test a little bit as to whether that causation piece is there. What applications were down? How long were they down? And how did they drive revenue and impact your revenue? So all of those types of documents and questions are things that a small business, small, medium-sized business can expect to have to answer when they're submitting a BI claim.
That makes perfect sense. Jane, can you kind of talk a little bit about what makes a cyber business interruption claim unique from any other type of business interruption claim?
Absolutely. The cyber BI claims are unique, I think, first and foremost, because they have shorter periods of restoration and they're usually partial disruptions, not full disruptions. So I'm used to the world and property where a hurricane comes through and just destroys a hotel. The hotel has to close. It can't keep, even if it's just one wing of the hotel, it can't keep the hotel open, right? So the hotel closes completely. And that reconstruction period is 9 months to a year. That's the typical business interruption claim I would get in the property world. But in the cyber world, we can be talking about business interruption impacts or periods of restoration as short as a couple days, right? So I have a car manufacturing loss, and that car manufacturer had its production disrupted for only 2 or 3 days at a variety of different plants. But its loss is in the multi-millions because, just the nature of its business. And so you're generally dealing with shorter periods of restoration. You're dealing with partial disruptions where a business is still able to generate revenue, but just isn't able to generate as much. It's less efficient. Its production line maybe is still running, but it's having to do certain processes manually because its computer systems are impacted, but it's not completely down. And I find that in the cyber context, businesses are typically more resilient and more able to mitigate than when they suffer a significant property loss. There's more workarounds, like if your ordering system goes down, for example, your customers might have to call you on the phone to put in their orders. But there's certain workarounds that you can still continue to operate even if you're not at your 100% operating capacity. Um, and because of that shorter period of restoration, I know we've discussed this, Tawana. You often get deferred sales instead of lost sales. You often see that there's a spike in sales or a business activity after a loss. And that's because when you have a shorter period of restoration, your customers, depending on the type of business, can be loyal. They're going to wait a week for you, right? They're not going to go and put in this parts order with some other business partner if you're just down or impacted for a week. They might have to if you're impacted for many months, but not for a week. Of course, that's different depending on the business. If you're a nail salon or a quick trip store where people just come in and get snacks and soda, people aren't going to wait for you. They're going to go to the next store. So that also depends on the type of business. But we do see more deferred sales and more makeup in the cyber context.
Yeah, I hear clients all the time telling me, in the heat of an incident that they're hobbling along, is what they say,
Mm-hmm.
and that they're still able to function, but at a much lower level than what they would consider normal.
Absolutely. Yes, that's very common. Yeah. I mean,
Mhm.
these things really impact their businesses, which is why business interruption coverage has become so important. It's such an important piece of the cyber policy. When the cyber policy was
Mhm.
first issued, it was issued as a liability coverage,
Mm.
which is something maybe that your last guest would have covered, right? The business gets sued for exposing their customer or employee data to the bad actors or to the dark web or whatever. And so they get sued with a class action. And cyber coverage was to come in and say, okay, we're going to cover that type of claim. But now there's all these first party coverages as well, where
Mhm.
the policy covers data restoration costs, forensic expenses, and the BI piece, which is really important. And we're
Mhm.
seeing that BI piece is becoming a larger and larger component of the claim. And I think that's because the coverage is being sold more, the limits are higher, and also just the ever increasing use of technology across all businesses. My law firm, we use a ton of technology. If our technology went down, I couldn't do my job.
Right.
I don't have a law library anymore. I don't write things down. I'm not writing my briefs by hand. It's just every business now is so integrated with technology that these impacts create large,
Mhm.
potentially very large lost profit claims.
Yeah, that's, Jane, I can't believe that you don't have books in your office to to help write your
Not a
briefs.
one, not even a printer in my home office. Yeah, totally electronic.
Uh, so, Jane, are there some common issues that a business owner should be aware of in terms of business interruption?
Well, I would say there's not a ton of litigation, right? So we're talking about BI coverage and litigation work. One of the interesting things about the cyber realm is there's just not a ton of litigation yet. I
Hmm.
think there's a variety of reasons for that. So businesses should understand that it's a buyer's market right now. It wasn't a few years ago. The insurance company definitely had the upper hand a few years ago, but it's now a buyer's market. So you are getting a lot of competition. More insurance companies are entering the market. So there's more capacity here. There's a lot of competition on premiums, a lot of competition on policy wordings, trying to make them broader to attract more policyholders to go with them, offering a variety of services that go along with the policy. Like we'll look at your systems and consult with you on what you could do to make yourself more resilient, things like that. So it's definitely a good time for businesses to explore purchasing BI coverage and cyber coverage in general. I think another reason there's not a lot of litigation is it's a really close knit community right now. The insurance companies and the brokers are in constant communication,
Hmm.
and they are both very incentivized to resolve their disputes instead of litigate them. So the bulk of my work is pre-litigation. There's a dispute. We work with the forensic accountants. We try to get agreement on the amount of those business income losses. But when we don't, there's most often a settlement or a resolution outside of litigation. And that's just as a litigator, I look forward to a time when we test with some of the appropriate test cases. We
Hmm.
test some of these theories and some of these disputes we have over the policy wording, and we get kind of a more robust body of case law. But for now, there's just not, and so we draw from case law from other types of policies, like the property world and other types of insurance case law.
When should a business owner start thinking about a business interruption claim? At what point in the process should that be,
That's
kind
a
of top of
really
mind?
That's a really good question, and that's something that we in the industry talk a lot about. A lot of the disputes on BI claims come because the information is not fresh or because people are frustrated that things are taking too long. I would say, like you said, Tawana, they're hobbling along. This business has suffered a loss. They're just trying to get back up in operation. So
Mhm.
they're not at that point trying to put together their their business interruption claim, nor do they even really know
Right.
or appreciate what losses they've suffered until the dust clears, right? So the insurance industry understands that this is not a BI claim is not something that's going to be submitted, even in the first month usually. But it is good if you get that BI claim in as soon as possible, because if there's questions about it, the people then their memories are fresh,
Mhm.
the documents are fresher. Like I would say, for example, you might make a claim for some labor costs that were used to perhaps perform some data restoration. And the claim might be, instead of hiring a third party to do this data restoration work, I just had my internal folks making customer phone calls and working on these workarounds. And I want to be reimbursed for their time, their labor costs. And the insurance company would say, okay, but I need to see what they were doing. I need proof that Joe Smith was working on something related to the cyber claim for
Mm.
this month after the loss. And if you wait to make that claim a year from now, Joe Smith is not going to have the records. You're not going to be able to recreate the support you need for your BI claim. So definitely, as soon as you can get it in, the better. And I'm going to take this opportunity to say it's also ideal if you have a third party accountant or a forensic accountant preparing the BI claim. Those always
Mm.
tend to go a little smoother than if the in-house folks are putting it together without any guidance from their broker or from a forensic accountant. And the great thing is that a lot of coverages now, a lot of policies now have a sublimit of maybe $250,000 or something like that for the costs of putting together the claim. So it's a coverage the policyholder has and should take advantage of. Go ahead and get that forensic accountant to come in and help you put together the claim. So it's in the format that the insurance
Mhm.
company needs when they've got to analyze it and test it.
Wow, that's definitely a good service to have there, to provide an insured with that assistance in preparing the claim. That's huge.
Yes, it's in a lot of, I would say, most of the policies that I come across. And I think it's partly because the insurance company recognizes it's to their advantage to pay for that service and get that business interruption claim in the best position and the best format it can in order for it to analyze it, because it costs the insurance company more with all the back and forth. They just want a clean claim that they can give to their forensic accountant on their side to look over, confirm, ask for additional documents like we talked about, and get that payment out the door.
Yeah, that's really helpful, I feel like. So Jeff, do you have anything that you want to ask Jane today?
I do. Hey, Jane,
Hey,
one of the
Jeff.
things that my extensive role here is to I always ask our guests if there's one thing you can do to reduce your risk or improve your security, the one thing you can do actionable that our audience could do today, what would that one thing be?
Get a good team is what I would say. You need, whether it's internal or external consultants, to analyze your cyber risk. So that is getting a hold of where your data is stored. If you had an impact to these applications, how would that impact your revenue streams? What workarounds do you have for those things? And get just a complete picture of your cyber risk. So you can take that to a broker. And this is, I think, the most important, a good broker that's going to make sure you get the right cyber coverage, right?
Yeah.
You've got, do you have invoices and you make payments over email, if you have that situation where your vendors email you invoices and then you wire or email them payment instructions, then you need funds transfer fraud coverage. There's a specific coverage for that. It might not be covered unless you get that coverage, right? So that's what we see a lot of these disputes is because there's a disconnect between the way the business operates and their cyber risk and the insurance that they purchased. And everybody knows I need property insurance. I got to cover this building and I want limits of this amount. But cyber is so much more complicated than that. And there's evolving risks. So you've really just got to sit down, put your team together and think, what kind of coverages do I need? And then you talk to the broker about what kind of coverages are available and make sure you're getting the right type of policy.
Yeah, and the thing you said earlier, about the slot machines, you caught my interest there. That the application behind it, you said the critical applications is something, and because of business, we can't do our jobs today without technology, and so it's an inherent reflection. So the application is the business function itself in many ways, don't you think, Jane?
It is. Yes, absolutely. And there could be hundreds, maybe even thousands of applications that a large company or a complex company or operation is using at any given time. So, it's really interesting to see when the insurance company asks for those documents, you usually get a spreadsheet back where the insured gives you hundreds of different applications that were impacted. And you have to sort through which ones were driving revenue and how long were they out and things like that. So it's a very document intensive process, but it's a really interesting process. And I love it because as an attorney, I get to learn about a new type of business every time we get a business interruption claim. You just really got to dig in. You got to learn that company's business and in order to analyze that business interruption claim. So it's a very interesting type of law.
Wow. Yeah, it really is. It's fascinating. I'm sure you've learned a lot over the years.
Oh, yes, I have. And we're still learning. This is an emerging area, I would say, and we're still learning and we're still testing this policy language. We're making changes to the policy language, trying to get it to be better and lead to less disputes, clearer. And I think it's a very interesting area of the insurance industry that's only going to grow with time.
Well, I tell you what, Jane, on behalf of the Safe House Initiative and myself and Tawana, thank you ever so much for joining us. And you're going to help a lot of people around the world with your insights. And welcome to come back anytime, because I'm sure we can find more conversations to have in the future.
Thank you so much for having me. This was fun.
Hey, Tawana.
Yeah.
We're almost to the end of our summer.
Yes, we
And
are.
I think you have another guest coming up before we do a wrap on this, but between now and next week, who's the next week?
Well, Jeff, next week we have Ted Brown at Lavin Rindner Duffield, who's going to be talking to us about coverage litigation and coverage claims for cyber incidents.
Interesting. Well, that should be fascinating. I tell you what, Tawana, it's going to be sad when Labor Day comes and our summer's over.
Oh, Jeff, we'll make it through, I promise.
All right. So it's not the endless summer, but okay. No. There's always next year, next summer.
That's right. That's right.
All right. Well, until next time, hey, great to have you, Jane, and Tawana, as always, a pleasure to co-host with you.
Thanks, Jeff.
That's our podcast for today. I'm Jeff Edwards for the Safe House Initiative. Thanks for joining us. And remember, be safe, be resilient, and be kind to each other. For more information about the Safe House Initiative, please use your mobile device to scan the QR code on the screen or send us an email at info at safehouseinitiative.org or visit us on our website, safehouseinitiative.org. We look forward to hearing from you.